Hey guys, so today I'm going to share my top 5 stocks to buy in the month of August 2021. I spent the past few weeks going over many different companies and I found a few that I believe will absolutely take off in the next several months with potential to double in value over the next few years. Be sure to watch this video all the way through as I'll be covering relevant news, significant numbers, price action of the stock, and my predictions. As a reminder, this video is for entertainment purposes only. And before we get started, go ahead and hit that like button and subscribe if you haven't already. Don't forget to turn your notification bell on so that you won't miss any time-sensitive content such as this video. So without further ado, let's get into my top 5 stocks for August. Alright, so my first stock is Fisker, ticker FSR. This is an EV startup with massive potential, even though they don't expect to begin production of their first model, the Ocean SUV, until November of 2022. However, it differentiates itself from other EV makers as it is partnering with Magna, an established global automotive supplier. They just announced details for the first of their global experience centers starting in Los Angeles and Munich, with locations in London, New York, Miami, and Copenhagen opening shortly after. With over 17,000 paid reservations to the Ocean, Fisker seems to be gaining a lot of steam in an EV market that some may argue is oversaturated already. However, with the increased popularity of state and federal government mandates to end production of gas-powered cars within the next 15 years, especially here in the US, there is plenty of room for a company like Fisker to make a significant impact in the EV industry. So let's take a look at the balance sheet of FSR. Fisker hit an all-time high of $31.96 in March of 2021. The price dropped nearly 65% as investors rotated out of high-growth stocks and into more cyclical sectors. However, it is up about 60% from its low in May of this year. Fisker has a market cap of $4.7 billion and a very good price-to-book ratio of 4.39. Coming over to the charts, Fisker is an attractive buy as it is sitting on top of the 200 EMA, which is the solid red line that you see here. Now, the 200 EMA functions as a very strong support and resistance depending on whether the stock is sitting above or below it. This represents a very good buying opportunity as it will take an enormous amount of selling pressure to drive the price below its current level. As with any stock, I recommend scaling into your position gradually and not throwing all of your money into it all at once. Depending on how much money you'd like to allocate to this stock, I recommend entering a smaller position first and gradually adding to it if the price falls. Now, analysts are rating this as a moderate buy with a price target high of $40 and an average price target of $26.67. This average price target represents a $10 increase or 63% return from its current price level. At an attractive price of $16, Fisker represents an amazing buying opportunity with potential to double over the next year and a half. For those of you with small account sizes, this is a perfect stock to enter now and hold for the long term. Now, you can buy shares of Fisker on Robinhood, and if you don't have Robinhood already, head on down to the description below and click on the link to get one free stock worth up to $225 when you open up a new account. I'll get a free share as well, and it really helps to support the channel so that I can continue to bring videos like this to you. Sticking with the EV trend, my next stock is Worksport, or ticker WKSP. Worksport is a leader in the market when it comes to truck bed covers. When Ford previewed its all-electric version of the Ford F-150 in May, it was a huge hit as it took over 20,000 reservations in less than 12 hours. However, a drawback that many potential investors noted was the lack of range that these vehicles would be able to achieve for an average daily commute. Worksport came to the rescue. Their new TerraViz solar cover system seems to be the answer for the range issue with these new Ford trucks, as they are estimated to add anywhere between 12 and 15 miles of range. Now, with a projected increase in the EV market of $30 billion in the next 10 years, Worksport figures to be a major player when it comes to adding range to America's most popular vehicle. So let's take a look at the balance sheet of Worksport. It is currently trading at around 43 cents. It has a 52-week range from a low of 6 cents to a high of 82 cents. Its market cap is $92 million. Worksport has a 5-year beta of 2.53, which shows high potential for growth. A beta of 2.53 means that for every 1% increase in the stock market, you should expect a 2.53% return on your investment. Coming over to the charts, WKSP looks like a solid buy, assuming it can break out of its downtrend. Ideally, I'd like to see a price action break out of its falling wedge on the daily chart with an open and a close above the top of the wedge to confirm the breakout. Now, if it continues to respect the wedge and price continues to fall, I'd be looking to enter a trade at the 200 EMA or this red line seen here on the chart. If you don't quite understand these indicators yet, don't worry, I'll be coming out with a video shortly detailing exactly how I draw support and resistance lines and what they mean, as well as the most common chart patterns like the descending wedge that we see here. Worksport is a speculative play as investors in the coming months will help to determine the actual value of the company. However, based on recent news of a connection with Ford and its value to the EV market, Worksport looks like a solid buy. Based on price action alone, we could see at least 30 to 40% returns if it can break out of its descending wedge. Unfortunately, for those of you with Robinhood, you will not be able to buy Worksport since it is an OTC stock. However, you can buy it on E-Trade. Next up, we have Roblox, or ticker RBLX. This app that boasts over 42 million players daily recently IPO'd on March 10th. If you're not familiar with Roblox, feel free to ask any kid under 16 in the US about it, as nearly half of them have an account. Essentially, it is a platform where you can hang out with others while doing things from competing in various challenges to attending virtual concerts. This is an app that took off during the pandemic, resulting from the need for interactive virtual spaces to connect with others. Now, with numbers like this and a cult following to match, Roblox figures to be a solid long-term play that has potential for substantial gains, especially with catalysts such as further restrictions in response to the increasing prevalence of the Delta variant. Now, looking at the fundamentals, Roblox has a 52-week low of $60.50 and a high of $103.87. Investors seem to be digesting those rapid gains, and the stock appears to be cooling off significantly with a drop of nearly $20 off of its June high. It has a substantial market cap at $46 billion, which not only shows what the stock is worth on the open market, but it also reflects the market's perception of what this company will be valued at in the future. Alright, so coming to the charts, RBLX is in a clear downtrend with this red line as moving resistance. I have 3 key support and resistance levels mapped out here with the current price of the stock encountering resistance at around $82. I'd like to see a break of $82.51 for a confirmation of a breakout to the upside. If the stock continues to fall, I personally will be looking to add to my position at the key levels of support at $77 and $65. Now, analysts have Roblox as a moderate buy with an average price target of $89 and a high of $103. I could easily see the stock as a contrarian play that could potentially run up to its all-time high with a catalyst such as increased COVID restrictions. Next up on my list of top stocks to buy this month is Netflix, ticker NFLX. About a week ago, Netflix released news that they will be diversifying into the world of games. They hired senior gaming executive from Facebook, Mike Verdu, to be their vice president of game development. Since growth in Netflix is directly tied to the amount of subscribers that they are able to bring in, this expansion into gaming could help to attract a different demographic of subscribers. Their most recent second quarter earnings revealed a decrease in the amount of new subscribers. However, they were able to grow their revenue by 20% by increasing their subscription prices. COVID impacts on production caused significant delays in the content lineup. However, it's interesting to note that engagement and retention actually improved in the second quarter of 2021 compared to the previous 2 years. Management at Netflix expects that as popular shows catch up to their pre-pandemic production levels, and as we come into a strong season historically for the company, that earnings for the fourth quarter will be stellar. Ultimately, I think this is a good buy at its current price of just above $500, and I recently started a position given its current predictions and price point. So looking at the balance sheet of Netflix, we can see that their total equity has risen substantially year over year from 2017. It has a PE ratio of 53.41 and a price to book ratio of 16.45. It has a decent beta of 0.74. It has strong institutional ownership percentage at nearly 80%. This means that a large portion of Netflix stock is held by large institutions, which is a favorable sign given the fact that these institutions employ large teams of analysts to perform research on each individual stock that they have holdings of. Now, coming to the charts, we can see that Netflix is holding support at its 200-day moving average. Like I mentioned above, the 200-day EMA can act as a very strong level of support or resistance. Price action has come down to touch the 200 EMA for 3 days, with strong intraday bounces each day off of the 200 EMA. I expect that Netflix will continue to hold this support, and I would view this as an opportunity to enter shares position long term. Analysts have Netflix as a moderate buy with an average price target of over $600 with a high target of $700. It will be interesting to see how investors view the outlook of Netflix over the coming months. However, at its current price point at just above $500, Netflix is a solid buy and hold for the long term. Alright, so I'm not gonna lie, I've just thrown a bag at this last stock. We're talking about the Chinese version of Amazon, or Alibaba, ticker BABA. This stock honestly gets me so excited. When you look at the balance sheet, charts, and price targets, you'll be blown away as well. Now, I know that the fact that it's a Chinese stock may concern some of you. I was one of those investors who lost a substantial amount of money last year when Luckin Coffee, or ticker LK, was delisted after they fraudulently inflated sales, so I understand if you're cautious. I also understand if you're hesitant to invest in a Chinese company that has extreme government oversight, but stick with my analysis and you might be surprised. If you're not familiar with Alibaba, it is essentially the world's largest e-commerce company. In terms of market cap alone, Alibaba has a larger market cap than Facebook and IBM respectively. As if being an e-commerce giant wasn't enough, Alibaba is expanding into providing financial services through Alipay that allows you to do anything from booking a taxi to investing in mutual funds. So let's take a look at the balance sheet of Alibaba. Here we see massive year-over-year growth in terms of total equity. In 2018, Alibaba's total equity was $436 billion. Fast forward to March of this year, and Baba's total equity tops $1 trillion. Let's compare this, for instance, to Amazon, which has a total equity of $93 billion. Now, keep in mind that Amazon has had multiple stock splits, meaning that Amazon is essentially a 5-figure stock, while Alibaba has had 0 stock splits and is trading at just under $200. Diving in further in our analysis, we see that Alibaba has a beta of 0.8. Essentially, the beta deals with the riskiness of a stock, so companies with a beta of less than 1 are less risky, while high beta stocks greater than 1 are riskier. Baba also has a very attractive PE of 24.43 and a PB ratio of 3.87. Coming over to the monthly chart, Alibaba is sitting at a very attractive price range at just under $200. It is currently at the bottom of its channel and at the 50-month EMA. It is also sitting at a strong area of support on the RSI. With earnings coming up in the beginning of August, this could be the catalyst for Baba to have a massive breakout to the upside. Now, you'll be hard-pressed to find a more attractive price point to enter a position in Alibaba. Personally, I loaded up on shares in my retirement accounts at around $200, and I'll be looking to swing trade option contracts on Alibaba when it breaks out to the upside. Now, analysts are rating Alibaba as a strong buy with an average price target of $290. Interestingly, analysts have a price target high of $350, which is roughly the top of the channel on Baba's monthly chart. At such an attractive price point with one of the strongest balance sheets in the world to match, Alibaba is poised for a massive breakout to the upside. Now, my recommendation is to hold shares long-term over the course of a few years. Simply holding until the price reaches the top of the channel would yield a profit of over 60%. So those are my top stocks for the month of August. As always, remember to do your own due diligence on the stocks that I mentioned here. These are simply my recommendations based on my research and are in no way financial advice. If you haven't signed up for a Robinhood account already, go ahead and click on the link in the description below to claim your free share of stock worth up to $225. Ultimately, it's a win-win because you'll not only be supporting me and enable me to create more videos like this for you, but you'll also get a free share of stock as well. If you haven't already done so, please smash that like button and subscribe to the channel, and don't forget to hit that bell to get notified when I post a new video. I make weekly videos on all things stocks, and my goal is to help each of you to achieve financial success through the stock market. Anyways, thank you so much for watching, and I look forward to seeing you all in the next video. Peace!